tariffs and jobs data just rattled the market? Are we on the edge of something bigger? The fast money traders dissect a rough day on Wall Street. Could this be just the beginning of a deeper correction, or is a rebound already in the making?
Boxes. If you look at everything that the market has done wrong, there's only been a few things, right? So the lower left, upper right, still on track, but we are due for a little bit of a pullback. Tuesday, we had an outside reversal day. Yesterday, we almost had another one, but we didn't close lower than the prior day's lows. Then we have a lower week that we haven't seen in a couple of weeks. So there's a lot of technical things that are brewing. We have 70% of the trade deals that are done. There's a lack of catalysts. You have a big cap tech has all reported and done well. So if you think about where the next catalyst is coming from, you probably struggle a little bit. You have tariffs, you have Russia, you have a bunch of things that are negative headwinds right now. So I think you're good to sort of let it all clear out for a little bit, reset, and then the market will get back on track. One last thing. Just remember how quick we recovered in April. You don't want to sell this market. We recovered in 7 days from that. The market was off in 2 days, 10%, and was up in 1 day, 9.5%. So the market is always torqued for that. Just be careful.
I think even without the weak jobs data, you could have made a case early this morning, Bonawyn, that it was time for the markets to pull back. But adding that jobs report, how much more concerned are you that this is not just a pullback, that this is an actual growth scare, perhaps, in the making?
I would say materially more concerned. To Steve's point, I do think that previous kind of April reversal and then strict rally or steep rally has informed investors. And I think perhaps they're a little bit less gun shy to kind of like pull the trigger and take profits when we're still in a positive situation. We just came off the back of earnings. To your point, all of the catalysts that had primed the market for that rally, the majority of those are now off the table. So there's kind of... Assume that we don't have the report today. There was already a benign situation with few catalysts, so it made sense to kind of take some profits, particularly given how narrow the rally that led us up here was. It really was tech and tech adjacent. You can argue utilities, you can argue data centers, but all of that stuff has to do on the AI play. I think the jobs number today, I would say, listen, there has been divergence between ADP and non-farm payrolls, but the prior 2 months revisions, I think, give you additional concern because the argument, and then you have the GDP number, which was revised higher, but then you might make the argument that perhaps that was kind of a lot of tariff pull forward. So I think the macro setup is murky enough and is now the new focus where it made sense for us to kind of pause. I think us seeing perhaps a bit of weakness in the labor market is the canary in the coal mine, and a prudent trader would be taking some profits with the additional, cloudiness to visibility.